Well, g'day there, traders and friends right around the world. Thanks for joining me as at this Tuesday afternoon market recap. Today, across all three of the US markets, we saw somewhat of a controlled retracement. It is only on the daily candlestick, but as we have a look at the three US markets, the Dow Jones Industrial Average closed down close to 55 or 56 points. The S&P 500 closed down 10 points. And the NASDAQ in and of itself closed down around 30 points. Now, if we have a look at these candlesticks on the daily, they are somewhat of just an average bearish day's candlestick. There isn't too much which we can call these individual daily candlesticks. I'm not going to go into or drill into the sentiment, place too much emphasis on the candlesticks due to the fact that we have incredibly low volume taking place across all three of the markets during this historical period of low volatility and low market participation. I'm expecting the markets to kick back off as at Monday week or next week. This is when we're going to move into our first full week of trading for 2015. Now, what to expect for the next 2 days ahead in the market? Expect this market to continue to move sideways. As you can see, over the past 1.5 weeks, or as at where we sit now, we haven't really done all too much. This is the one candlestick going back to last week, and this is where we're ending up as at mid this week. Of course, we have a holiday on January 1st for New Year's or New Year's Day. So really, if we start bracket trading this range of the market, which we've got an upper limit around 18,100 and we do have a lower limit around 17,800. I would be very surprised to see the market over the next 2 or 3 days break out below this level or to break out above this level. I am expecting the market to continue sideways. All three of the US markets for that matter, I do not foresee a big retracement in the downside or to the downside, and also I cannot see a large bullish breakout until, of course, we transition into the 4 weeks trading next week beginning Monday, when we expect, of course, the daily volume to come back into all three of the US markets and to see some more sustainable moves translate to the markets and also our individual stocks. Now, having said that, a lot of people are still trading over the festive season. That's all well and good. One of the stocks, the main stock which has made a decent move this week, as at our pro analysis class, is Twitter. You can see here we had a bearish entry at $36.99. Our first target is down here at $34.79. We've seen a nice little continuation to the downside. We have broken below that bearish trade trigger. We're sitting down here at $35.86. So we've made a little over $1 on a $37 stock, which is a pretty decent move. If you are in this particular trade, you've got a couple of decisions to make. Where do I place my stop? First stop, let me just zoom in so I can show you this. The first stop which I'd be looking at would be, at the moment, potentially taking some of my positions off the high or the break of this one particular candlestick. If in fact we do see a little bit of a bullish bounce in the price of Twitter, if you want to keep more of your position on the table at the moment, you definitely put it above Monday's candlestick. Therefore, you are limiting your risk. And if you do want to take some positions off at this level right here, you're at least banking some of a profit. All right, so it's a pretty decent trade management and setup on Twitter. Yes, it's breaking to the downside. Congratulations if you placed that trade. What I'm more excited about as I flick through our top 13 individual trade list is definitely the management, or sorry, not the management, but what is sort of cultivating for us moving forward. A lot of stocks are really starting to set up very, very nice structure, some very bi-directional trade setups, and they're really starting to mature. We are very close to harvesting the next crop of individual trade setups. As I take a look at Tesla, for instance, I'm not going to go into the detail. If you want to see the detail, you have to get into that pro class. But we spoke about this over last weekend, and you can really start to see the two most recent candlesticks give us somewhat of a clue of what price may be doing, especially as we see the 50 exponential moving average start to interact with the current price. So keep a close eye on Tesla. Have a look at Netflix also. Netflix, very, very neutral. My MacBook Pro is just alarming me that I've got 10% battery. I actually run Parallels on my MacBook Pro, so that is a Windows type error inside the operating system of a Mac. Pretty interesting. Anyway, very, very neutral on Netflix. Have a look at this. We may get a Bollinger Band squeeze. You know my thoughts on that. Stay patient. That is definitely coming to us. Have a look at this held trade. Look at this Bollinger Band squeeze materialize even further. This is getting ridiculously tight now. If we see a flinch above or below those two trade triggers, get involved in Halliburton. It's going to be an explosive move. I cannot tell you emphatically which direction it's going to be. I'm 100% neutral, but that break is going to occur. GoPro again the last 2 days, you can see the two bearish candlesticks right off from that or we can't really see it right here, but off from this pivot point that we spoke about over the weekend. Very nice candlesticks on the daily. If we have a look at some of the more, or what I should say, some of the oscillators are still pretty much giving us mixed signals. We are at a very reasonable pivot point. We are very neutral in the way of our oscillating indicators. This stock is really set up bidirectionally. It looks as if it's wanting to push lower. The markets are pulling back a little bit, but at the moment it's not enough to be initiating shorts in GoPro. Google today is seeing what we call a doji candlestick after a shooting star. This is looking exceptionally weak. Also, when I bring in that 50 exponential moving average, you can see how these things start to work, right? You can see how they start to come to us. What I could do now, what I actually haven't done, which is interesting, I thought I would have done this in the Pro, is start bringing up a new bearish entry on this Google trade. The bearish entry for me is going to go in at 525.50. That will give us a rejection at the 50. You'll see a new lower high, also the continuation of the trend moving lower, lower low, and lower low. This will be a perfect rollover trade down to our next level of support down here, about $510 a share on Google. So a pretty nice $15 intrinsic value move on put options. That's a very nice trade on Google. I will keep you updated as this trade progresses. I'm down to 8% right now, so I'm going to quickly speed this recording up. Facebook again, very, very neutral, interacting at this resistance level. Still no real breakout set up on Facebook. We were very close about a week ago. We are pulling down. This may be old resistance as new support. Very neutral given that we are at a resistance and also battling the primary trend line. We'll see how that, or the result of what happens with that daily price action. FAS is still sitting at our target, or sorry, our trigger at 131.90. I do not think any students are positioned in this stock. I've made my thoughts very, very clear. Next target is 140.68 if you are in that stock. Have a look at Caterpillar. We're seeing a quick 2-day pullback. You can see also how we're setting up that next lower high right around the 20 exponential moving average, very close to that bearish trigger to the downside. Pretty decent trade. Baidu, I still love. Okay, I told you how comfortable I was at the 237.73 entry. On Monday we saw a bearish pullback, then today we saw a bullish little spinning top right on that pivot point right down here at about $228 a stock. We are still holding that support level, which was once old resistance. Yes, this pattern has technically broken down. I was very excited for the implications to the upside based off that bullish pattern. Oop, down to 7% right now. Need to find my charger, but let me just finish with 3 more stocks. Right now, 237 is an incredible entry. If we see any bullish continuation, this is going to be a very quick trade up to 248. Keep it keep an eye on it, a very close eye on Baba. I'm telling you it's going to move. Just keep an eye on it. Baba today, right now this is so neutral, it's not funny. Let's just have a look at the past 3 candlesticks. You can see we have a spinning top, we have a doji candlestick, we have another doji candlestick, we have pretty much a shooting star candlestick. This is all happening within the past 4 daily bars, okay? When we have a look at the Bollinger Bands, they are still quite wide. They are going to constrict the price of Baba. If we get into a very low volatility move, or at least another 2 to 3 days of low volatility moves on Baba, i.e. the price goes nowhere, this is going to be an incredible stock. Right now, it's too premature to be getting into Bar, whether you're buying long or short at the current market price. We've got no confirmation whatsoever of which direction Bar wants to move, right? Until it makes that decisive move below levels of key support or above levels of key resistance, there's no point in buying or shorting the stock of Bar based off a hunch or what you expect the stock to do in the coming days. Only get in when, of course, it makes that decisive move. That's why we trade with contingent orders based on price. So I'm very neutral on Baba. My triggers remain. Just sit tight on that particular stock. It's coming to us also. Amazon again. It had a nice little bullish pop on the Monday. Today was an inside day, almost a shooting star, down about $2. No real net movement. You heard my reluctance to trade to the upside based on the overhead resistance. That is really showing itself, especially on today's daily candlestick. And let's move into Apple. Apple over the past 2 days has really been struggling to get above our 114.95 entry. See that Fibonacci resistance box? That is more or less why. Very, very strong resistance level, exceptional analysis. What we have almost is what we call an evening star reversal candlestick pattern, 111.01, 114.95. I'm just completely neutral on Apple, but these trades are definitely maturing. Yes, we've remained patient. We've been disciplined over the past week and a half. Twitter's the first stock which has rewarded us. Congratulations who placed that trade, but there are a ton an absolute ton of other stocks in our pro list, which is setting up to reward us moving forward, okay? So thank you so much for watching this analysis video. I'm going to stop it. I need to find my charger, plug it in, render this video, and get it up on YouTube as soon as possible. All the best, ladies and gentlemen. Have a fantastic New Year's Eve. This is probably the last time I'm going to speak to you until, of course, 2015. So stay safe wherever you are around the world. Enjoy your evening as we transition into 2015. I'll see you all most likely as at New Year's Day, okay? Or if not, at the end of market trading on the 2nd of January 2015. All the best, ladies and gentlemen. Catch you later. Goodbye.